Welcome back to Alpha Recap, your fast read on the day's market beats and headlines. We're recording after the close, and as always, if you have questions, you can reach us at stockalpha.ai.
Good to be here. The tape had a lot going on today. Big volume, legal headlines, and some clear thematic threads. Lots to unpack.
So let's dive right in. The standout was Tesla. It finished the day down and actually hit a fresh 52-week low at $297.82. That's now a new reference point for traders.
Right. And that low isn't just symbolic. It becomes a psychological level and a potential tax loss reference. Traders will be watching whether it acts as a floor or attracts more selling pressure.
And the volume picture was wild elsewhere. Nvidia saw about 132 million shares trade hands, but only rose by roughly 0.25%. So big turnover with muted price action.
Exactly. When you get that combination, heavy volume without a strong price move, it often looks like distribution or rotation rather than a clean breakout. That's worth monitoring tomorrow.
BITO, the ProShares Bitcoin Strategy ETF, also had huge flows, about 160 million shares, while the ETF fell to $8.64. Down about 1.5%.
Crypto-linked ETFs continue to amplify intraday moves in the digital asset complex. Large flows through these products can spill over into overall market volatility.
We also saw micro and low price names with outsized activity. NVD traded about 109 million shares, and GOSS around 203 million shares. Those spikes can create real intraday volatility for active traders.
Yeah, that tracks. Smaller names with huge volume are often hotbeds for short-term swings and can skew intraday measures of liquidity.
So what really stands out here is the liquidity story. Big flow into semiconductors and crypto ETFs, but not always accompanied by strong gains.
Right, and tying the threads together. Heavy activity in Nvidia and BITO points to two themes: AI and semiconductors positioning, and sustained retail and institutional flows into crypto exposures.
Which, honestly, can drive cross-market volatility. You get sector repricing when those flows shift.
Another thing to watch. Tesla's new low came amid broader sector rotation. When growth leaders print fresh lows, it forces reassessment in concentrated growth portfolios and can increase market-wide caution.
Quick check. The actionable signals the brief flagged. Watch if Tesla reclaims meaningful technical support above $300 or if selling pushes it below that new low.
And track Nvidia's volume tomorrow for follow-through. If the turnover stays elevated without price strength, it often precedes consolidation or a pullback.
The number that really caught our eye on Tesla: $297.82. That's the one people will be talking about in the afternoon desks.
And remember, we're speaking after the close, so these are finished day observations, not live calls.
Moving on to legal and governance. There were two securities class actions that surfaced today.
Right. Intuit is facing a securities fraud class action covering trades from August 22, 2025 through May 20, 2026. And the deadline for lead plaintiff filings is September 8, 2026.
And Erasca is under investigation by Hagens Berman for alleged securities law violations, with shareholders being invited to consider lead plaintiff status. Litigation like this usually adds headline volatility.
Legal notices typically lengthen uncertainty around guidance and forward-looking statements. Event-driven desks and volatility-sensitive mandates price this in.
Not the kind of news companies like to see during earnings season.
No. And beyond courts and law firms, there were governance moves. Salt River Community Gaming Enterprises named Patricia Tate as CEO. It's notable because she's the first tribal member and woman to lead SRCGE.
That's a governance milestone. And while it didn't move public equities immediately, these diversity and leadership changes factor into ESG assessments over time.
Dossier Perfumes also appointed Stefano Curti as executive chairman. Leadership reshuffles like that often precede strategic or capital moves in private and sponsor-backed companies.
Switching gears, analyst moves and commodity dynamics. Goldman Sachs upgraded Rio Tinto on planned cost cuts And B of A raised Continental's price target, citing raw material tailwinds.
Analysts are signaling that easing input costs could support margins across materials and industrials. That narrative matters because it can trigger near-term flows and reweighting in funds.
So, in plain terms, if commodity prices come down, manufacturers can breathe a little easier on margins. Monitor commodity price action and follow-up research.
Yep. And speaking of trends, AI and cloud rollouts kept rolling today.
Amplify reported that AI now resolves nearly 1 in 3 airline Facebook customer conversations, and airlines respond up to 21 times faster than average brands. That's concrete evidence AI is changing customer service economics.
Accounting Seed launched a Salesforce-hosted managed cloud platform with more than 20 AI tools, tying finance workflows into Salesforce's trust layer. Another sign AI is moving into day-to-day operations.
Laureate Education signed a 3-year AI and cloud deal with Google Cloud. 3-year commitments show institutional buyers are moving from pilots to production.
And at the chip level, Muse Semiconductor and True Circuits are offering services to universities at low cost, which could strengthen the academic to commercial microelectronics pipeline.
Big picture. AI adoption is shifting from pilots to operational scale across customer care, enterprise finance, and education. That supports software vendors and cloud providers.
But it also pressures incumbents to modernize, which is why product launches and multi-year deals above matter.
On income and ETF flows, Infrastructure Capital announced a monthly dividend for an options income ETF and reported distributions for a few other funds, but omitted amounts and dates.
Distribution cadence matters for income investors, but you have to confirm ex-dividend and payable dates on issuer pages before relying on distributions for cash management.
And again, the heavy trading in BITO underlines how ETF flows remain an active source of intraday volatility.
Short reactions.
Big move in crypto ETFs.
Yep, big move.
On ESG and workforce, there were quieter but steady stories. A law academy launched in San Francisco with a high school, apprenticeship renewals in Akron, and an Apple Montessori expansion into Pennsylvania.
These are workforce and community pipeline items, not immediate market movers, but ESG-focused investors and municipal analysts watch them for long-term social return signals.
Microcaps and compliance. Healthcare Triangle completed share issuances to raise shares outstanding above the NASDAQ minimum market value requirement. That's a practical example of microcaps taking dilutive actions to maintain listings.
Right. Microcap issuers sometimes execute corporate actions that can dilute existing shareholders just to stay listed. It's a recurring pattern that affects small-cap liquidity.
We also had a handful of quick-fire items. A managed services provider hitting 45 years, a private manufacturer move, and a legal tech demo. All part of the day's smaller headlines.
Emerging patterns from today. Elevated volume with muted price action in big names. AI moving to production. And legal and listing risks continuing to pop up.
And the practical watch list for tomorrow. First, Tesla. Price and volume around that $297.82 level to see if it stabilizes above it.
Second, NVIDIA turnover and price action. Sustained high volume without clear gains may indicate distribution. The opposite, volume plus price, would imply renewed appetite.
Third, legal filings and timelines for Intuit and Erasca. Any court filings or plaintiff appointments will extend the headline flow.
Also watch for follow-ups from Goldman Sachs and Bank of America on Rio Tinto and Continental for quantified cost cut or raw material impact estimates.
Final few takeaways before we go. 1. Tesla's fresh 52-week low and heavy volume in semiconductors and crypto ETFs were the day's clearest market risk signals.
2. Litigation at Intuit and Erasca creates event-driven risk. Those deadlines and filings are the next milestones to watch.
3. AI adoption stories from airlines to Salesforce-hosted platforms collectively suggest an acceleration from pilots to operational scale across industries.
4. Analyst activity flagged commodity cost relief as a potential margin tailwind for materials and industrials. Monitor commodity prices and follow-up reports.
Quick closing thought. Analysts note risks and short-term momentum. This is informational only and not investment advice.
Correct. We're not recommending buying, selling, or holding anything. Data suggests themes and risks, and individual circumstances matter.
If you want to dig deeper on any of today's stories, head to stockalpha.ai. And if you have questions about anything we covered today, go to stockalpha.ai, where you can ask us directly and we'll answer live.
For more market analysis and insights, visit stockalpha.ai. And keep those questions coming in the Q&A.
All right, that's it for today. Thanks for listening to Alpha Recap. We'll be back after the next close with more headlines and analysis.
Thanks. See you then.